Hey guys, this is Nick from Financially Aware, and in this video I want to talk about Palantir. They made their S-1 filing today with the SEC for their IPO that they want to do in September. So they are going to do a direct listing. I'm going to talk about what the difference is between that and an IPO, and I'm also going to talk about what Palantir does, how much money they make or don't make, and what their prospects are to let you know if this might be a good stock to buy when they finally come public. So what does Palantir actually do? In their S1 filing, they talked about it a little bit. They started out in 2003, and they're a software company that was originally working just with the US government, and their talking points were something like their software used by the government to help track down where Osama bin Laden was, so they can go over there and find them by using data from all kinds of sources. And they've also used that same data to help in Iraq with the army trying to find insurgents and people who are placing IEDs on the road and stuff like that. So they are a data aggregator, and they put all that data together and help you build a clearer picture that you might not have seen with the data in all these different databases. And so their main selling point was for the government, but now they're branching out into commercial companies as well. And so right now, kind of half of their revenue is from government and half is from commercial. So let's dig into some of the numbers on how much they make, how much they lose, what their prospects are.
So to give you an idea of what Palantir does, this is their Gotham software, which is just for governments. And here you see the perp in the middle, and they can check all of his associates based on who he called, his DMV records, all kinds of stuff, and they could trace all the records of all of those people and come up with a picture that they didn't have before just by looking at each of those individually. They have these other mapping software and again, known associate channels and things like that. Even some kind of video software. So that is the government thing. This is Foundry. This is the commercial part. And here you see airlines use it, I don't know, to manage their flights or something like that. There's all kinds of data mining applications that this thing has, and one of these is like your supply chain, all the pieces of it, and you can run different kinds of simulations, changing variables of all kinds of things and see what would happen. So apparently this software is very useful to businesses as well. So here's a look at their cumulative spending on research and development. It's up to $1.5 billion since 2008. And just know that they've gotten something like $3.4 billion in private equity, including from In-Q-Tel, which is the CIA private equity firm. So I don't think they're going out of business anytime soon, especially if they have a product that the government really wants. They're going to keep them around, so I wouldn't bet against them. Now here's a look at the average revenue of the top 20 customers. Back in 2010, it was only 1.2 million. In 2019, it's 24.8. So that thing has been increasing a lot. The thing is that they only have, I think it's something like 125 customers or something like that, 150 customers. So they don't have a lot of customers, and their top 3 customers are something like 30% of their revenue. So that is a lot, and that is a risk that if they lose any one customer, they lose a good chunk of their revenue. But you see that the average revenue from the first half of 2019 to the first half of 2020 grew 36%. So that is very good. And their revenue over time from 2 million in 2008 to 743 million in 2019, and in the first half of 2020 their revenue grew 49% to 481 million. So they're definitely growing pretty quickly, and being that it's software, if a lot of the research and development costs have already been spent, then each new customer is a much higher margin than some of the earlier ones when they were still spending money on R&D. So looking at the revenue and income for the last 2 years, 2018 they basically made 595 and lost the same. 2019 they made 742, lost 588. The first half of 2019 they lost 280 on 322 in sales, but in the first half of 2020 they made 481 million in revenue and only lost 164 million. So they are definitely trending towards being profitable, and I think they made a statement that they were going to do like $1.2 billion total revenue this year and finally become profitable. So they're well on their way to becoming profitable, I would say. And because they have a lot of research and development already done for their two products, each new sale is mostly profit for them. So their margins should definitely improve going forward. And you can see that here in this chart with everything as a percentage of revenue. So here their net loss is 97% of revenue in 2018. It goes down to 78% of revenue in 2019. And for the 6-month periods, for 2019 it was 87%, but in this period, 2020, it's down to only 34%. So like I said, they're definitely moving in the direction of eventually having a profit not too far off, it looks like. Now, one thing to look at if you're trying to figure out what the stock is worth, here is the history of the sale price of their stock. These are private sales between individuals, not on an exchange. And you see that the year ended December 31st, 2020, which we haven't gotten to yet, but this is through August 21st. The high price was $850, the low price is $419. The VWAP, the volume weighted average price, which means most of the volume traded around this price, $5.35 on 37 million shares sold in this period. Don't expect you're going to get $5.35 a share when this IPOs, or even $8.50. Obviously, these guys are insiders that did these trades, and they expect to get a lot higher valuation than that when they do the IPO.
Now let's talk about their IPO filing, their direct listing. I don't know if you know what that means, but let me tell you what a regular IPO is. In a regular IPO, a company tells an underwriter like Goldman Sachs, who may have a few underwriters along in the syndicate, like Morgan Stanley or something like that. There'll be a lead underwriter and a few other ones, and their job is to take this stock and sell it to hedge funds, mutual funds, before it even lists on the exchange. So they do that in what's called a roadshow, where they travel around the country to all different mutual funds and hedge funds and pitch them the stock and sell it to them. So say Palantir might have said, okay, we got 5 million shares to sell at $15 a share or something like that. And the lead underwriter will kind of help them figure out at what price they can sell it based on interest and demand. And that price is subject to change before the IPO. But what the underwriters generally do is they try to underprice it. Okay, so that's a selling point for the mutual funds and hedge funds. They know that if they have a relationship with Goldman Sachs, they're going to get to buy these hot IPOs at kind of under the market price. And so the underwriters purposely market it under the market price so that on the first day it gets a good pop, because that does two things. It keeps people happy, it keeps the people that they sold to happy, and keeps business flowing between those people, and it gives very good marketing and advertising for the company. You know, you see the headline, this stock IPO'd and it was up 80% on this first day or whatever like that. Recently you see Big Commerce I think their IPO price was like $24. That's the price that they gave to institutions and hedge funds. And then it opened up on the first day somewhere like in the 70s or something like that. So that's a great headline. Hey, Big Commerce is up 200% on the day. Okay, it gets people excited to go and buy it. But Big Commerce doesn't get $70 a share. They get the $24 a share that they were selling it to the institutions for. And not only that, but they don't get the full $24 because the underwriters take a cut as well. So after all said and done, they're going to get less than $24 a share. The difference with a direct listing is that Palantir will sell their stock directly on the exchange. There's no underwriters. And so if there's a first day pop in the stock, they get that price, the opening price. They're going to pocket all of that money. So that's the big difference. And companies like Slack and Spotify have done this already, and to different results, okay? Spotify seemed to have done pretty well, Slack not so well, but that's not necessarily as a result of the direct listing. Maybe it is partially, but what I will say is that normally with a regular IPO, the underwriters themselves have a vested interest in making sure the stock stays high, and so they have an obligation to support the stock. So by buying and selling it, their market makers support the stock for a period of, I don't know, 30 days or something like that. There is no such thing with this direct listing. So it could be a double-edged sword. On the one hand, investors will bid it up to whatever they think it's worth, and as you have seen with companies like Hertz that are, bankrupt and are thinking about doing a secondary offering just because there are investors there that just think that they have to buy anything just because they heard something about it, that could, potentially make the stock go up really high, a lot higher than it should. And on the other hand, if there isn't that much interest in it, it could make the stock really drop from its opening price, and there'll be no other interested parties or market makers to support that thing. My guess is that it's probably going to open a lot higher than it normally would with a regular IPO, just because of the frothiness in the market. And so you see all of these companies are running out now to do an IPO as quick as possible, especially before the election, because of uncertainty with what's going to happen during and after that. So they all want to get their IPO through the door before they don't know what the hell is going to happen. So that could be good, that could be bad, but I would guess that because Peter Thiel's name is attached to this, and this company is pretty well known, and it's a software company and all of that, so I would guess that a lot of investors are going to bid this thing up, and that's what Palantir is counting on, and that's why they're going this route. But if you look at Slack, that stock opened up crazily and had a huge spike of volume and all that, and it's done nothing but come down since then. So it could be that way. It could be the way of Spotify, that it opened up pretty high and kind of fell down. It opened, I think, 165, went up into the 190s and fell to the 130s. Now it's like 260 or something like that. That's not a direct result of the direct listing, but the first few days or a month or so, it could be a portion of that direct listing phenomenon of people spiking it up. Now, think about this. If most of the demand on the first day comes from retail investors, meaning people that just look at a headline and go, Palantir, Peter Thiel, PayPal is going public, I have to buy it at any price and place market orders or whatever at the opening, there's going to be a lot of really smart hedge funds and everything looking at this and saying, if this thing opens and it gets to a level where we think it's way overpriced, we're going to start shorting it. So there's going to be a push and pull between the retail buying it and the smart money that are going to be figuring out if this thing is too overpriced and they should be shorting it right from out the gate. So I don't know what's going to happen, but I wouldn't recommend trying to buy it on the first day, because like I said, as long as the market stays frothy like this, everybody's going to think it's a can't lose situation and they're just going to buy as much as they can. Wait a week or so, look at the numbers based on how much they're losing, how much their revenues are, what other companies could potentially you could look at to value them, and kind of take it from there, because don't just buy it on hype and hope. And so that's my look at Palantir and the IPO direct listing. If you like this, give me a thumbs up and leave me a comment where you think the stock will open and where it will close, say a week later or so. And as always, if you haven't subscribed, please subscribe to my channel now. Thanks for watching.